I think we've got to put the rout into some sort of context. The commodity market was hugely inflated, and we're seeing the air come out of that bubble. But, of course, this happened over a short period of time, but all I'm saying is commodity prices moving back towards what the marginal cost of production is, and that's a perfectly rational thing to do.
In retrospect, China's been in a construction bubble. China uses as much cement as North America does in a year every 11 days. I mean, how long could that last is what a lot of the analysts are asking. And so now that it's starting to deflate, it's obviously having a major impact on commodities. Numbers just came out of China. Their steel demand, their domestic steel demand was down 4.5%. It's been down 16 of the past 18 months. And everything we're hearing, I met with a senior executive from one of their biggest steel companies, and I said, tell me what sector is looking good, what end demand's looking good? And he just looked at me and he said, nothing.
We're seeing it in a different way, I think, in the oil market as well, where we have the increase in supply as the Saudis choose not to be the swing producer within OPEC. We've had a build-up in supply in the US, and now we have Iran coming on stream perhaps with 500,000 barrels a day in the very near term and up to 1 million barrels a day in a month's time.
I'm very much of the camp that oil prices will recover, despite the negative momentum which we see at the moment with US production holding up, with the question marks surrounding Iran and with Chinese growth. The reality is that as an industry we're spending significantly less on capital at the moment, and that's continuing. And that will ultimately have an impact upon supply. And therefore my view is that supply and demand will come into line. When that will happen, my best view is into 16, probably later part of 16, but we will see oil prices recover.
I think you've got to be very brave to be buying into commodity currencies right now. Even if you had seen the low in commodity prices, in Norway they went early, they saw the fall in oil and the impact on business investment, they cut rates very aggressively, whereas Canada earlier this year said it's going to be transitory, don't worry, we'll get through this, and then summer, actually, we've got a problem, we're cutting rates. So if probably even just over the falls we've seen over the last 2 or 3 months or so, there'll probably be the knock-on impact in terms of business investment in Q3 and Q4. So the lagged effects will still come through and depress those currencies even more.